Hi guys, welcome back to our weekly market outlook. Today on Sunday, the 15th of June, roughly half of the first half year, this 2025 already over, and let's check back in our outlook what goes this coming week. We got quite a bit of data which are incoming this week, and we got geopolitical tensions continuously rising further. Israel attacked Iran. Iranians are retaliating, basically. Several people are dying in Israel, and that situation seems to get a bit out of control, which, if looking at figures, obviously kind of are also potentially what is and what will potentially happen further. In the US, LA story is still unfolding, and obviously kind of both have chances to shake up markets a fair bit. Looking at Donald Trump, he obviously has some new ideas. He says with him, this conflict can be solved quite fast. So as any of the conflicts he claims, but any conflict which is important at the moment to observe is not an exterior, but an internal one. And that's the Bank of Japan's policy rate. 0.5% or below that is expected. However, interesting story remains as not only inflationary pressure is rising, but the Japanese central bank, Bank of Japan, is likely not able to actually hike rates even further. Their debt is more than 200, about 215% compared to the GDP. So more than 2 years, everyone in Japan, the entire economy needs to work basically in order to just pay the debt back if they would want to, but that's going to be swapped into the future. However, the debt burden obviously kind of still the big story, which is also rising in the US, by the way. But basically, as long as the interest is being paid on that debt, the story can be postponed to future whatever generations. In the US, there was some advance basically of both Democrats and Republicans. Maybe they should kind of really demolish that debt ceiling, which we remember every year has been raised further. But maybe just cancel that entire debt ceiling question, so there won't be any issue anymore in the future. Well, God knows how long that story is gonna unfold. Trust issue has been broken. Speaking of trust, obviously kind of that's currently as well what is causing some negative setbacks in financial markets. The S&P slightly falling, and we see that there is some negative momentum, some tensions brewing potentially. We have the high points here, and we are now shy of the recent high points, which could cause the S&P weakening somewhat, and with the S&P potentially kind of back to lower figures, we might see the same being true for the Nasdaq, as obviously as well the Nasdaq index is just and has been rising kind of really at this level. The question is, will we see some setbacks right now again, or will we see another attempt to higher prices, which could be the important story as the market is going to unfold further motivation moving forward. We just talked about the Bank of Japan's interest rate decision, which is due on Tuesday, as usual, without any time in mind. But next one up is also something important coming from the United States. The Federal Reserve is going to decide upon their interest rate moving forward. Will they start to cut rates? That's the big question. Currently, expectation sits at 4.5%, so no change expected. First one, is Jerome Powell going to start to lower interest rates, basically potentially causing inflationary pressure to rise, which has been easing actually fairly recently. CPI data lower, PPI data, producer prices also lowering quite substantially. Actually, this was basically this week. We showed look into these figures here. PPI was expected at 0.2%, but is expected now, was incoming at 0.1% only. So all the GDP, not the GDP, the PPI data has kind of weakened somewhat. So we see that the inflationary pressure back out of the US is out of the woods, at least for now. The currency pairs with the involvement of the dollar show us otherwise. The euro kind of rising further. Is there gonna be an important rate cut gonna follow up? Then we are expecting to see the euro dollar basically to strengthen further. A rate cut would be negative for the US dollar. The euro, which has been quite strong, is expected to rise further in this case. We see daily charts, weekly charts have broken back above these recent high points, and one of the most important area was this one here, this pin bar candlestick, which had been broken fairly recently. The riots in the US, the trust issue in the US might just be kind of what is around the corner and behind those current moves. And there's no difference in the other currency pairs. The pound US dollar currency pair rising again somewhat further. The Australian dollar against the US dollar is back above this 50 moving average. That's the weekly chart, pretty much long term as well, which could give us a further positivity here in this market. So any surprise, in a way, slight surprise rate cut out of the US might unleash a further rocket starting. Euro rising, pound rising, Aussie, US dollar currency pairs all rising potentially. Vice versa, we've seen that the Japanese yen was starting to gear up some momentum against the greenback, against the US dollar. The dollar against the Japanese yen, however, has not been able to basically defend the recent basic negative trend here. Instead, the market is still looking nicely ready to break the low points here, which was the long-term trend line. By the way, for you guys subscribers, sorry, at fxstrategies.asia, our website, you guys were trading those with us here quite nicely, and now we still expect that the market is potentially at some point at least ready to break lower. So stay tuned for any updates here on this currency pair. Back to the charting pattern. For now, we don't see anything interesting happening here. It's still that the market remains in a triangle formation. A breakout likely gonna be expected. Whether this is gonna happen and causing the market to break higher is the big question, or will we see a break to the downside, might be the opposite question. Looking at the dollar index is something interesting here, as the dollar index, basically everything, other currencies, quite a bit of few, the euro, the Canadian, Japanese yen, and whatnot. Google it yourself, you'll find the exact results. The majority with 60% is the euro US dollar currency pair, in this case, kind of giving a somewhat reflection of this index. However, the dollar index currently is weakening again, and we saw this happening here before, commented on this one as well. So we see that the market is breaking lower. This supportive trend line here has been broken, and with the market retesting that zone, we now saw the market falling off the cliff to the downside here, and likely now going to weaken further. Dollar index here at least showing us the interesting part, which is seemingly causing a further negative price momentum here gonna happen, at least as long as the important news will kick in this coming week. Next one up is another interest rate decision from the Swiss National Bank. Now, the dollar against the Swiss franc is not a currency pair, and let's open it up here as well quite quick. It's not a currency pair which we quite often take into consideration. We both mostly don't focus on this one. However, the market is kind of at interesting levels at the moment. We can see that the market has tested zones which are quite important and remarkable to observe. Something similar to what we've seen here with gives us the comparison between the dollar Japanese yen and the dollar against the Swiss franc. That support area was holding the market up quite a few times here until it broke and really was retested. So support on the left, resistance on the right, and now off the cliff, with the exception that the market did the same basically here again, and is now potentially ready to fall off the cliff if the market breaks this low point, and it had already broken the lows as we observe. So what we expect now is just maybe a slight retracement higher to then see the market pushing back to lower price levels based on monthly and weekly charts. it's the exact same nice, interesting, cool pattern we've seen on other currency pairs, and in particular against in the dollar index, which is right now the cool part here. Support level broken, support level retested, and now off the cliff. We are not in oversold territory, so the market might still gear up momentum to the downside somehow further. And that's quite the interesting part as well when looking at the Swiss National Bank's interest rate decision. It is expected that the rates are going to be cut at least a slight bit, 25 basis points again, and that might mean that a further weakening momentum in the Swiss franc is going to kick in at first, but after that, and that's the exact trigger, we might see the dollar Swissy rising slightly, which could be used into selling opportunities here with the market potentially ready to break lower. So those ones are the most important informational news here this coming week, and they are kind of quite remarkable to be traded as well. So let's focus on those ones as well moving forward, plus obviously geopolitical tensions in regards to what might happen even further in regards to retaliation from Iran, the Israeli side, which is obviously kind of remaining kind of quite at the big pushable button, causing the dramatic story to kind of continue even further. What's next as well is the oil market in this regards, and oil really exploded this week, right? So when Israel attacked, obviously shortage questions. Are we going to face issues in the supply of oil? Always the same story. Short term, those ones are kind of quite important. The market within a couple of trading days here, Wednesday, Thursday, Friday, that was quite a rocking movement here, right? From the 65 whatnot US dollar all the way above the 75 US dollar level. We are now trading at a very strong resistance, technical resistance area, and this zone might actually last for now, right? So the expectation at least is that the market is going to weaken further. Those stories and those points are quite often of short-term nature, and in this case obviously kind of likely not going to give this market a long-term uplift. But the charting pattern now tells us the market has changed, has shifted slightly, and we have to see if the market breaks, which is quite close by on the monthly chart, the 50 moving average here in blue color. If that line breaks, upside might be seen. If that line is not going to break, but instead kind of acts as a strong resistance area, which might be the likelihood, we could see that downside motivation and a further slide in prices is potentially going to continue. Gold is kind of quite interesting as well, breaking to the upside here, and that looks like a tricky and really regular triangle formation with a strong resistance area, right? So we have this triangle plus the a higher low, and now the market might just start to weaken first of all before then the breakout is going to happen. Quite often we have the same story, the resistance area being retested. After a retest comes maybe a test of the next lower price point, might be actually, to be precise, that zone here, a market yourself before the market kind of rises even further. Quite a standard charting pattern, but as long as this situation is going to unfold, let's not talk about the riots in the US, but on the geopolitical tensions, Russia, Ukraine is maybe a backbone kind of story, not big at the moment, but Iran, Israel is still that ongoing conflict, which is obviously kind of dominating the news, and still that is going to cause the markets to potentially be impacted. Gold as the risk indicator potentially rising further. And as we said, and that's the impactful momentum, not quite sharply, but for major global stock markets, S&P falling, Nasdaq correcting, the DAX has already kind of corrected quite a fair bit. And I was trading this market here to the downside a couple of trading days ago and closed it, resistance on the left, support on the right. Not a big trade, but it was a nice couple of pips to the downside here in this market on the side. Guys, I think with this, we have the majority of markets analyzed. And silver looks a bit shaky, currently rising again. We've done quite a fair bit to the upside already. Basically also, I sold a call option, basically strike 37. So far, the market maturity is a month from now, basically, minus a couple of trading days. It's currently uncovered, so we have to see if we need to hedge that position. For now, it's looking kind of quite good. The idea is that the market is going to roll to the downside as well at some point here, giving us enough time for this market to potentially unfold even further. Anyways, for you guys, subscribers, you always get the latest news day in, day out in our WhatsApp chat. Next one up, a couple of the crypto markets examined here. Dogecoin looking a bit shaky, kind of weakening somewhat. Solana not doing anything much, and we can see that Ethereum is starting to basically get back on track, at least somewhat, right? So this in itself, if the market closes in the next couple of hours here, would be a bearish looking candlestick pattern. However, in general, the market is holding up at current levels, and still it is having the strong input here. The market weakened well below the 50 moving average here on the monthly chart. We saw this beautiful turnaround candlestick pattern, the pin bar candlestick. In May, the market rocketed, and now we can see that the momentum is shifting from inflows and now outflows Bitcoin towards inflows in Ethereum, helping obviously Ethereum and the big guys which are obviously supporting this market. And looking at it from the Bitcoin market here as the mother of all tokens, the market is in a sideways pattern, but rather in a way slightly positive again. So we can see that it's not over yet. The market looks still kind of positive here, and this upside, as always, depends on how the stock markets will perform. In general, obviously the Nasdaq, namely if the Nasdaq is able to rise again further, and we're not far off from the all-time high here, this would likely push Bitcoin higher, Ethereum higher, just you name it, the other markets as well. A quick word in regards to the euro against the Australian dollar. It's kind of quite an interesting cross to trade as well, because the markets are looking, or this market, quite interesting, right? Resistance, technical resistance zone, the market went to the upside, corrected, but at this area here, where we've seen this pin bar candlestick here, basically this candlestick here, we can see that the market might now be on track as well to see rising prices. The euro might have a competitive advantage here. The Australian dollar might somewhat weaken further, which would be the Aussie kind of weakening as a risk-on currency. However, the euro may be slightly strengthening as another strong or kind of rather risk-on currency as well. So it's an interesting currency pair. Check it out yourself. At the moment, it looks like the market is going to be able to rise further, especially this current week, which is again ending today, has given this market a nice push to the upside. So we have interest rates decisions this week. They are likely going to shape up markets. Bank of Japan as one of the important ones. We have definitely the Federal Reserve, and we have the Swiss National Bank, which are all gonna give important, exciting inputs here in markets. And guys, that's the majority of trades we talk and have in common for now. Stay tuned, focus on your own trading, and let us know what you think about this video. Please, looking forward to get back here on track with you guys. See you then. Take care, everyone. Have a good day. Bye-bye.